This is Don DeBartolo, a senior commodities broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight advisory service. Trade Spotlight is broken into three segments: Trade Spotlight Futures, Trade Spotlight Commodity Options, and Trade Spotlight Futures Spreads. This is Beyond the Spotlight, a segment that will highlight two or three markets that may become trading opportunities for this week. This week begins with Monday, June 1st, 2020. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. First chart I want to take a look at is for the December 2020 Lean Hogs, and there was a recent trade in this market going long the December contract, and we were stopped out of that position on this move lower. So I readjusted the lower trend line, and that'll act as a potential stop loss again for a long entry. Waiting for the market to break this upper trend line, or perhaps this pivot point high right here. That high you see is 53.75 from May 27th. Right now the stochastics indicator is showing another uptick in upside momentum. We had that previously on the last trade. So the momentum still looks good to the upside. Trend is still flat. This is the MACD indicator. So I was anticipating a breakout, which obviously didn't occur, but perhaps second time around it will if this MACD turns to up. You have a 20-day moving average converging on a 50-day. However, if these two cross over, that would actually be a bearish signal. So I would like to see those widen and have the trend indicator turn up in this market, corresponding with the breakout of this trend line or this pivot point high. Again, stop loss would go below this lower trend line. Upside target is the number 2 point of this 1, 2, 3 bottom formation. That number 2 point comes in at 60.82.5 from April 28th. The second chart is for September 2020 orange juice. This was on the video last week. Talked about looking for a sell-off in this market, and Friday you saw there was a big sell-off in which the market closed below this lower trend line. So that's trading session from Friday. We opened at 127.90 and closed at 123.50. So a sell-off of 440. And again, close below this trend line. So looking for a short entry opportunity. Looking down at the momentum, you can see the strong downside momentum. The trend is still a little flat, but it looks like it's turning over bearish here. 20-day moving average is still pointing up as well. I'd like to see that hook over before taking a short entry in this market. Looking for the market to trade back into this range here. This would set up the right shoulder then when you get a sell-off into here, and then a rebound back to about the 120 price level, matching this left shoulder high. That high right there is 121.50. The 12-month contract high was just put in last Wednesday. That comes in at 128.65. So once these indicators line up, we're going to be taking a short entry in the September 2020 orange juice market. A third chart is actually of a future spread. This is the July 2020, January 2021 crude oil spread. And what we have here is a inverted head and shoulders setup. This is the left shoulder here with this low made on the 30th of March at a negative 699. So then you had a couple days of rally, some sideways action, and then a sell-off, surpassing the left shoulder, creating the head of the formation. Picture someone standing on their head. This head is the 12-month contract low of the spread that comes in at negative 1073. Market rallied again, reaching this last level here. That's about the negative 200, negative 150 range. and the market is trading sideways here. You can see the trend indicator is starting to wane a bit, and your momentum indicator, even though there was an uptick late last week, is in the overbought territory. So looking for the market to sell off back to this range here. This is actually would be the target on the trade, the left shoulder at just about -7 points. So looking for the market to sell back off into here and then rally, potentially finally breaking out of this level here. So initially this will be the stop loss. You can see there was a gap on the chart that was filled in twice now. So I believe the market will break down through these lows, sell off into this area here, and then there potentially the target's hit and we can turn around and look to buy this spread. There's a seasonal to be short the spread going into June, so that is in line with the technicals of this chart. So this potentially could be a trade for this week. Quick look at what the Trade Spotlight advisory looks like. It's an email service. You'll have the timestamp when the trade comes out. You'll see which segment it is in the top left-hand corner. This is actually the Trade Spotlight spreads. This is a new trade, so you'll have the information behind the trade, the thought process behind the trade, any pertinent facts like margin requirements, contract expirations. You'll see the entry and stop and target, so you know the risk-reward parameters for each trade, and a chart you could click on to view. If you're not following the Trade Spotlight, I encourage you to do so. Just go to the Daniels Trading webpage, click on Advisories, and under Technical Analysis, you'll find Trade Spotlight. You can see a write-up, some previous posts, and you can click the orange button to subscribe. It is a free service to clients of mine. Otherwise, I do offer a free 90-day trial. If you have any questions on any of the charts here, or just the markets in general, you can reach out to me. Here are all my numbers and email address at tradespotlight@danielstrading.com. Thank you for taking the time listening. Hope you find some good trading opportunities based on the charts I showed today. And again, if you have any questions, please reach out and be safe out there. Happy trading.